Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday, the 11th of June. We've got quite a considerable risk retreat we're seeing today. We had the Federal Reserve meeting yesterday. The markets initially moved higher. Risk positive, dollar negative moves were taking hold. You can see that dollar initially moving lower, rebounded a little bit into the close, but again a little bit higher off its highs, I might add, today. But what you did see is that Treasury yields fell sharply. The 10-year yield fell sharply, and subsequently what we did tend to see was that the S&P fell over into the close, and those futures are sharply down today. Futures on the S&P 500, that's now two negative closes in a row, and seemingly a third. So the risk rally is in retreat, and you can see that through these European markets today. Now, the Federal Reserve was very accommodative still on its monetary policy, but was cautious and cautious about the recovery in the economy. And subsequent news we've seen suggests that COVID-19 cases are still rising, and a problem in Texas, and localized areas of the. So that's a problem for the economy reopening on a serious basis, and how the economy can rebound, and how there are sort of question marks and now excuses for taking profits, I think, for these markets. And we've seen that playing out through the European moves today. We've also got the oil price, which is just falling back a little bit. It's still essentially in its consolidation phase that we tend to see. I always look at this Brent crude chart, because you see the bull run, consolidation, bull run, consolidation. We've had the bull run. Are we in another consolidation at the moment? I would say yes, but that could still fall away. So we need to be a bit mindful of that. But the bull move on a medium-term basis is still holding, but on a near-term basis, it is now struggling a little bit today. So risk is a little bit negative, so that's allowed the dollar to pick up slightly. And you can see that through these currency moves. You've got the Aussie and the Kiwi underperforming. Sterling also turning backwards. Bit of a choppy move actually on euro dollar. I'll talk about the technical implications of that in a bit. But you can see that the yen is a safe haven outperformer, as is the Swiss franc today. So some interesting moves we've got at these markets at the moment. I still think this is likely to be a near-term correction lower that ultimately provides the next opportunity to buy. However, what we've probably got is that near-term, let's show you the futures, that near-term corrective move on equities, as this profit-taking phase just plays out. So, in terms of data points today, we're looking at US PPI and the weekly jobless numbers. PPI is expected to remain where it is on the headline, dip slightly on the core PPI. And then moving on to the jobless claims, 1.55 million jobs. Now, you can see here, these jobless claims have been falling on a consistent basis week after week now, and it's this 13-week moving average is the quarterly or the effectively a 3-month moving average, and you're now well below that. So it's a move that I think the market, in the wake of that payrolls report last week, just sort of might put a bit less emphasis on, because jobless claims are literally people losing their jobs rather than the balance of where people start to reclaim their jobs again. That data is not included in that number. So it's a little bit of a one-way skew on that regard. So maybe takes a less of an impact on market moves, but it's still worth looking out for today. Now, my chart of the day is the German DAX index. So what we have is the DAX, which 2 sessions in a row, negative candles, negative closes, and has now gapped lower to the downside. It's broken this recovery uptrend. It's only a sort of a 4-week recovery uptrend, and essentially I think it just means that basically the market could now be going into reverse. You do have a big gap to the downside, but there again, gaps were commonplace on the upside on the DAX, and they very rarely get filled, to be fair. You've got one there, one slight one there, one here, another one here, another one here at the end. So about 5 gaps which throughout the last 4 weeks have not been filled. So I wouldn't necessarily guarantee that this gap is going to be filled, although it is resistance at 12,417. You can see that move, I think, better on the hourly chart, where 12,325 was a reaction low, higher reaction low support, which has now been breached. And you've got this, the fact that we're now breaching these higher lows, and we're now starting to roll over, forming lower highs, lower lows. And you can see here through the momentum on the hourly as well. MACD lines are below neutral. That's sort of coming up to 3.5 week lows there on those MACD lines. RSI going below 40 for the first time in a month, basically. So these momentum indicators certainly have turned corrective on a near-term basis. I'd be also looking out for this falling, to an extent, falling 21-day moving averages become the basis of resistance, but also in the coming days, I think as the 55-hour moving average turns over, sorry, 21-hour moving average, I should have said, sorry, and the 55-hour moving average also rolls over, we could start to see these moving averages starting to become a basis of resistance again. So the market certainly looks as though it's into retreat. You've got a band of support, 11,813 down to 11,575, decent band, I think, before you start to get to the 11,247 breakout area. So essentially that's 1,000 ticks below that 11,247 level. So that would be quite a considerable correction if that were to be seen. That's about 8%, 7.5%, 8%, isn't it? So you could see the market going to the downside, but whether it sort of retreats that far, I'm not entirely sure at the moment, but it is, I think, in retreat now, certainly considering the momentum has shifted towards a more corrective look. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website to sign up for our webinars, and click to watch our Trader Talks videos to gain some top trading ideas.